Okay, new jobs numbers have landed in both Canada and in the United States. In Canada, it is a big miss. 32,600 jobs lost in the Canadian economy during the month of March. Economists had expected a gain of 10,000, so the variance is some 42,000 jobs. The actual number, 42,000 jobs, fewer than expected. On a net basis, 32,600 jobs lost in Canada during the month of March. All of those were full-time jobs. There was a drop of 62,000 full-time jobs in Canada during the month of March. It was partially made up, only partially, however, by a gain in part-time employment of 29,500. The rate of unemployment in Canada holds steady at 6.7%. Actually, it ticks upwards from February to 6.7%. That's what economists were expecting. And wage growth was much more modest than expected, and more modest than in February as well. Wage growth comes in at 3.5%. Economists were expecting 4.1%. In the U.S., a big beat on the non-farm payrolls number, 228,000 new jobs added to the U.S. economy during March. The economist community was expecting 140,000. There's a live look at the U.S. dollar. And the rate of unemployment in the United States comes in at 4.2%. That's up by 10 basis points over the February number, and also 10 basis points more than economists were expecting. So those are the numbers. We're joined now by Pedro Antunes. He's chief economist at the Conference Board of Canada. Pedro, let's start with the Canadian numbers. Not for the first time in your career are you looking at a number that is that wide variance to what economists are expecting. What do you make of this significant plunge in full-time employment? 62,000 full-time jobs lost in the Canadian economy. On a net basis, a total of 32,600 jobs in the negative.
Yeah, well, again, without having seen the details, I think what we're seeing now is the first signs of the loss in confidence that people are having on the economy, both businesses and households. We've seen confidence in Canada plunge to essentially recession levels. And in fact, household confidence or consumer confidence in March fell to where it fell, in fact, to below where we were at the worst times during the pandemic. So it's not surprising that businesses are going to be holding back on employment, and now we're going to face in the coming months the real impacts of these tariffs taking effect in the auto sector, steel and aluminum. This is going to affect all sorts of manufacturing jobs in Canada. So the news is not looking very good at all going forward. I think this is just the start of what we've been expecting from this trade war.
Here are some details. The job losses were led by these sectors: wholesale and retail trade, culture and recreation, business support services, agriculture, and manufacturing. Regionally, employment fell in Ontario and Alberta. In Alberta, the losses were concentrated in manufacturing and wholesale and retail trade. Saskatchewan added jobs, and yearly wage growth, as we said, decelerated to 3.5%. What do you make, Pedro, of that much weaker than expected wage growth number?
I mean, well, in a way, I think we've been expecting wages to ease up. They've been really running way too hot. And I think part of that story over the past year and a half or so has been that wages were catching up to that period of high inflation, and there was a lot of wage settlements that were really trying to recoup some of that purchasing power lost for employees. So the trend is in the right direction, but I wonder now if we're not seeing again, the effects not only of kind of this correction being done, but also of a slackening labor market. The unemployment rate has risen by a full percentage point since it's in the last year. Again, when we look ahead, the situation is looking much, much more dire, again, because of this unsensed tariff war. So, it's just, I think what we're going to see here in the next quarter, and as long as these tariffs are on, is a labor market that is going to continue to slacken.
Hi, Pedro. It's Bryden here with a question. In your note this morning, you highlighted this comment about the outlook and uncertainty around changes in immigration policy, and also sort of baby boomers aging and retiring. And together, you noted that those might provide some more tightening in the labor market. 6, 12, 18 months from now. And so we seem to be in this pocket here of weakening unemployment. But can you maybe speak about the tightening that are from these sort of non-tariff issues with more of a longer time horizon?
Yeah, no, that's a great point. And I think, we've seen a complete abrupt change in immigration policy around the non-permanent residents. For the last 2 years, we've seen population growth accelerate to close to 3% for 2 years, with essentially non-permanent residents coming in and at a pace that was exceeding permanent residents. So, we were close to 1 million people a year coming into the country. And the policy change has now been to reduce the stock, and that's the wording that's used, of non-permanent residents, the people that are here, from about 3 million down by 1 million. So essentially, the objective of the federal government, the immigration ministry, is to see about 450,000 people a year leaving the country with their permits being expired. These are temporary foreign workers, international students, and other refugees, for instance, that have 1 or 2 year permits typically. So in a way, that is going to help tighten up a labor market that has slackened too much in the last year. And that's kind of this fundamental pressure. But it doesn't take away from, the shock of, job losses in the manufacturing sector. I mean, these are much much quicker impacts that we're going to see on the economy very short term. But longer term, as you mentioned, we've got these fundamental pressures that are going to be tightening the labor market. So if these tariffs only last a quarter, and let's hope that this is, again, another tactic here that we're seeing from the U.S. administration, and we are able to see employment kind of recover a little bit in some of these key sectors and confidence recover, that is a trend that is going to continue, that tightening labor market trend.
We told viewers that private sector, or I should say full-time jobs, dominated the job losses. So did private sector job losses, Pedro. There were 47,800 jobs lost in the private sector, only about 3,000 public sector jobs lost. Does that flow into your view that this is largely a confidence issue? Is this a private sector confidence issue?
Yeah, and Paul, you mentioned they were fairly broad-based, wholesale and retail trade, transportation, manufacturing. Of course, I think we're starting to see, we saw actually some strong gains in manufacturing in prior months, and I think it was in advance of these tariffs, trying to get product through completed and through the borders before these tariffs were applied. So yes, definitely, I think what we're seeing here is that very sour feeling. I called it the sinking feeling that we have about where the Canadian economy is headed when we look at essentially the confidence measures that are being affected. And of course, the most telling confidence measure that we've seen in the last couple of days is what's been happening to stock markets and financial markets. This is just, a major hit here to business investment and certainly to consumer spending as well.
Okay, last question on the U.S. jobs numbers. I won't ask you to weigh in on today's numbers, but I'd love to hear what you expect the trend to be in U.S. employment over the next 6 to 8 months.
Well, I think they're feeling much the same concerns here, and of course, stock markets in the U.S. were hit just as hard. We were always worried about how big an impact these tariffs would have on the Canadian economy. We felt we were the target of these tariff wars for certainly for the last number of months. But now this is complete madness, really. It's a tariff war against every country in the world that the U.S. has embarked on. And this means that the U.S. is going to be the economy that's hardest hit. In any sense, if these tariffs are lasting more than a few weeks or months, we're going to see the U.S. economy in a recession. I think there's very, very strong risks of the U.S. going into a recession. Of course, that causing obviously the direct problems and direct impacts on Canada's economy, but also on the global economy. We can't forget, at current exchange rates, the U.S. is still a quarter of global GDP.
Pedro, thank you so much for helping us. As always, we really appreciate you stepping in and sharing your views as soon as those numbers are released. Pedro Antunes, chief economist at the Conference Board of Canada. Let's debrief briefly with our featured guest of the morning, Bryden Tice. He's a portfolio manager at Avenue Investment Management. What's your take on the U.S. numbers? I'll just recap those numbers. 228,000 jobs added in March, much stronger than the 140,000 expected. What are your thoughts?
Definitely stronger than I was expecting. So, and we've spoken about previous to the number that the trend in the last couple of months had weakened a bit, and you've seen layoffs announcements pick up. And so I would have expected the March number to be a little bit weaker than that. And if you then have the job numbers continue to be relatively resilient in the U.S. for the next couple of months, in spite of the government cutting jobs, I think that makes the Fed's job much harder, because they're going to be looking at the employment situation as being much tighter and not fully reflective of the different sectors in the government that are cutting jobs. And I think then, any impotence for the Fed to ease, I think it's much more challenging when you have a labor market that still continues to grow above trend. And so that would be one of the main takeaways I have, is that number is higher than I expected, and I think it makes the Fed's jobs a little bit more complicated for the next month or two.
And of course, the